He calls this Bretton Woods 3. Bretton Woods 1, when we took over for the pound sterling at the end of World War II. Bretton Woods 2, loosely, when we became the petrodollar, signed the agreement with Saudi Arabia, which coincidentally they did not sign again here last year, which was the 50th anniversary, re-upping the exclusivity of only taking dollars for oil. Big deal. Bretton Woods 3, he says, now we're in a system that will all be about transparency, which would be blockchain and commodities. Gold. And if you look at the United States, we've become a net importer of gold since November, since Trump won the election. A net importer after being a net importer for my entire career. And we've seen north of almost 60 million ounces delivered into the COMEX, most of it coming from London since then. Crazy things are happening in this market, but the central banks, which are the most wealthy, well-informed traders in the world, are shedding dollars, they're shedding treasuries, and they're accumulating assets.
All interviewers have their own style, and my style is to try to get to the point and to be intensely curious. And the key to interviewing is listening.
Take a look behind the curtain with a real whistleblower and American patriot. Prepare to embrace the uncomfortable truth, because this program has no time for comforting lies. Here is civil liberties enthusiast, Second Amendment defender, and recovering FBI agent Kyle Seraphin.
Well, hello, my friends, and thanks for joining me here on the Kyle Seraphin Show for the Sunday Sit Down. This is a conversation we have with an interesting person that has a story to tell about something that's going on that seems relevant to the world. And today's guest is Andy Schectman. You guys will find out more about him, but he's a gold guy. He owns Miles Franklin. They've done more than $12 billion worth of precious metals sales. He's been doing it since the late 80s. He's a really interesting man. He's a very nice man. And I think his insight into what's going on in the global economy, what is money, what is currency, what are assets, things that a lot of Americans actually don't seem to have a real good grasp on. I wanted to talk to him. And before we get started with that conversation, which will be presented to you with no additional commercials, here is the one from my friends over at Patriot Coolers. This is the company, patriotcoolers.com. They are a great American company that is based out of Houston, Texas. They are friends of our family. They have been supporting us since February of 2023. So even before any of you were most likely listening, if you remember the first Patriot Coolers ad, you are a seriously OG Kyle Seraphin Show fan, and I appreciate all of you. If you guys want to support them, whenever you're in the market, if you're looking for a gift that you need something for, you want a product that's going to hold up, you're going to feel good about it. It's well marketed, it's well messaged, it is well designed, and it actually performs the way it's supposed to. It keeps your beverages hot or cold, so it's easy things to do. You can also check out their merch. They've got things like hats and so on. And they've also got backpacks and soft coolers and hard coolers, which we use all the time here in the Seraphin household as well. They make a great gift. They make a thing that you might want to have as the weather gets nicer and you start going outdoors. You're going to want to start keeping cold beverages cold. If you're looking for one of their coolers, we use them literally every single week in the Seraphin household in the back of our minivan, and we transport our goods. And of course, when we go on a trip or something like that, keeping ice cold, keeping all of our food, food safe. Check them out. The 50 quart is the one that we use. You guys can check out any of their products. You'll be happy with them. PatriotCoolers.com. The promo code is Kyle, Kyle. You guys all know this if you listen to the program. Check it out in the show description. And enjoy this conversation with Andy Schectman. Ladies and gentlemen, thanks for joining me for the Sunday Sit Down. Today's guest is Andy Schectman. He is the founder of Miles Franklin. He's a gold guy. He's a precious things guy. He's got baseball cards behind him and coins and some kind of boxing gloves from some interesting sporting event. Andy, welcome to the program. Thanks for joining me again.
Good to be here again, Kyle. Thanks for having me. Truly, it's an honor to be here with a guy like you, and it's great to be back again.
I thought we were supposed to do this a long time ago, so I'm glad we're doing this again. It's been kind of a wild ride.
Yeah, no doubt. It has been, and it is. And it is good to be back here again and chat about the wild ride. I think that is going to continue to be wild.
Good enough. Let's refresh people with who you are and Miles Franklin as a company, kind of give them maybe the overview, the bullet points on an index card kind of thing, and we'll move from there.
I own the company. We started it, my dad and I started together in 1989 on a wing and a prayer in an office the size of a closet. My dad's middle name is Miles, and his best friend from grade school, who lent us at the time $60,000 in 1989, middle name was Franklin. And somehow, some way, we have, here we are today, 35 years later, we've done 12 billion in sales. We've never had a customer complaint. And I guess you could say some respects, I'm the embodiment of what is the American dream. And I thank God every day for being born in this country and for people like you who have the courage to stand up and do what's right, and not to put myself anywhere near the pedestal that you stand on. I've always tried to do that as well. And in talking about things that uh, aren't typically spoken about by someone in my position, in particular, the last 4 years, all the craziness that we saw, the woke agenda, the lawlessness, the immigration policies, the election issues, the judicial system, all of this stuff has been stuff that I've talked about, that some told me I was, maybe a little crazy to be doing, but it bothered me enough to actually do it. Not quite to the level that you have, of course, but nonetheless, the things that you talk about really resonate with me, and I thank God every day that this country has afforded me the opportunities that it has, and that's why I do what I do, and honored to be here with you.
That's what we got to do. So twice a year, I have to bring you on in case I'm in the dumps and I'm feeling lousy, and you just come here and you pump me up, and that, right on. It's very flattering. Deserved. Let's go this. You said a man in your position. What is that position?
As someone who's running a precious metals company would normally talk about economics and precious metals, which I always have. But I've spent more time over the last several years kind of saying that this holistic approach, the previous administration had me wondering if all of the stuff was by design, if there are no coincidences in life. Were we trying to reset the system? Were we trying to reset the system by making people say, what the hell's happened to this once great country who is letting everything that was important, the institutions like the FBI, like the judicial system, like the electoral system, like the immigration system, and like the system of meritocracy, where I go back to 89 as the least likely person to have ever achieved what I have, but through hard work and stick-to-itiveness, as my sixth grade teacher always called it, I was able to achieve my dreams. And these things were being thrown by the wayside. Our culture was being whitewashed. I'm the guy that shouldn't be talking about that stuff, but I did, and I have been, and I did in thousands of videos over the last few years, because to me it was all connected. It was all part of the same fabric of opportunity, or opportunity that was slipping by, of mismanagement of the world reserve currency and mismanagement of our affairs, of our culture, of our country, and how it was all maybe by design in a system that had gotten so far astray. A trillion seconds ago, Kyle, is 31,688 years ago. And everyone talks about a $37 trillion debt, ignores the almost 200 trillion in unfunded liabilities between Medicaid and Medicare and Social Security and government military pensions. Doge talks about eliminating all of this money. They had aspirations of 2 trillion. They've done 200 billion, which is a lot of money, more than any of us could spend in 2 lifetimes. But when you talk about how big the problem has gotten, we're so far away from any fiscal sanity. We owe $28 trillion by 2028. In 3 years, we take in $5 trillion a year in tax revenue. That leaves us 50% of the way there just to cover the treasuries that come due. $6 trillion in treasuries come due later this month or early next month. $6 trillion. We have 28 total that come due by 2028 with 15 trillion in tax revenue, which doesn't take into account the deficit spending we're doing now. Mm-hmm. So yes, that's a big piece of it. But you put that together with all of the stuff we saw over the last 4 years, the stuff that made you testify in front of Congress, put it all together, and you have to wonder, man, was this part of a bigger picture? Those are the things that I spoke about, which was unusual. Most of the people in my position would talk about gold and silver and maybe dabble in macroeconomics, but that's as far as they would take it. To me, that's only half the story. That's all part of a bigger picture, which, it's interesting with the new administration. I still have to wonder, and I say this with all due respect to the current administration, who I voted for, and I am thrilled that they're here. But if we don't question everything after living through what we did the last 4 years, we learn nothing. And I question sometimes, privately, well, now not so private, is he the Trojan horse, or is he riding on the Trojan horse? A lot of the things that he is doing, I'm for, but then we see like the rollout of ID 2020. Look who's behind ID 2020, and you'll question, that's a little strange. You got the Rockefeller Foundation, the Gates Foundation, And I think it's a company called Sarnum. They're the big vaccine corporation, and Nomi Prince did an amazing expose on the ID 2020 and all the patents surrounding it and where it could ultimately go to. And you have to wonder, yes, and election integrity is very, very important, but this ID 2020, this new digital ID, is it necessary? And could it lead to a digital surveillance state? And, threatening 100% tariffs on the BRICS countries isn't the way to do it. It's not a tariff, it's a sanction. That is what brought the BRICS together to begin with. How about the olive branch instead of the stick? I mean, there are a lot of things that make me wonder, are we trying to push the system over the edge because we're so far indebted, because you could argue we've crossed that Rubicon? And is it easier to reset the system when it's done, at least in terms of its appearance, by effect rather than by our own volition? And I don't know. I hope I'm wrong. I mean, I hope he's looking out for all of our best interests. I voted for him and I would do it again. I'm just simply saying, if we don't question everything after what we lived through, we learn nothing. So I'm constantly questioning and saying things that may buck popular opinion or wisdom. But that's my role. That's what I'm here to do. And right, wrong, or indifferent, I'll continue to do so.
I think that's fair. Let's get broader, if you don't mind. I want to start talking about something that I have an instinct, and I don't know that it's true, but you deal with people who are trying to find a way to protect wealth, to protect their money. And I imagine you deal with people from the spectrum, all the way from people who have a couple of pennies to rub together and those people who maybe have a couple of $1 million to rub together. Do you think, by and large, Americans understand what money is? Is there a difference between things like money and currency? What is wealth? Can we kind of have like a broad discussion of that before we talk about ID 20 and any of the things that we might get to that destroys the system? Can we talk about the current system and maybe how little people understand about it? Because I'm sure I'm one of them.
Yeah, J.P. Morgan said gold is money, everything else is just credit. When you look at wealthy people, yeah, they have big bank accounts, but wealth is typically measured in assets by the very wealthy people. And
can you define asset real quick too, just for
sure? Well, I mean, whether it be a baseball card collection from the turn of the century, or gold and silver, or art, or cars, or precious metals, or cryptocurrencies, or real estate, those are assets. And there's something called the Cantillon effect. The Cantillon effect basically says the big money, the people closest to the money, benefit disproportionately in an inflationary environment like we have. In other words, the people who have access to the money, like the hedge funds as an example, or the wealthy people who are able to buy assets closer to the money than the people who are struggling day to day, getting paid, biweekly or whatnot, and most of that money going to pay for necessities that are being inflated. So they are not benefiting the way that the people who are closer to the money, who have been able to buy assets and buy them before the money trickles down to the mainstream in the form of inflated goods. And that's really what we see happening here. We see a group of very wealthy people getting wealthier, and we see everyone else struggling to make ends meet in an inflationary environment. And so the way that the wealthy have gotten wealthier is through the appreciation of their assets. Holding dollars is a loser's game because the inflation and the money creation is eroding the value of the currency precipitously, and far more than we are being led to believe. The measurement of inflation is the CPI, and the CPI should be called the CPI, issued by the BLS. Take the L out of that equation, and you're closer to the reality that the CPI is issued by the BS, because it's a system that excludes things like food and energy and housing. And it continually changes. If, last year coffee was up 85%, so they pulled it out and replaced it with tea, so that the measurements by which we gauge inflation are skewed. And so what it really means is that the wealthy people, I think, who understand this, they're the ones that buy assets, and assets appreciate in an inflationary environment. That is the Cantillon effect. That is, I think, the key. And I learned that at a very young age. When I started this company, I was 19 years old. And my father said to me, listen, Andy, I borrowed the money to start this company on a wing and a prayer. I'm not going to let you make the same mistakes I did. So there's one rule and only one rule, or I'm going to fire you. All right, Dad, what's that? You're going to buy some gold or some silver every 2 weeks, period. That's the only rule, Dad? That's it. Cool. I can live by that. That was 35 years ago. My dad's still alive, albeit retired. I've owned the company outright for a long time. He won't fire me anymore, Kyle, but I've honored my word to my dad. And I bought every 2 weeks something, whether it be 1 ounce of silver or a whole lot more. I bought something every 2 weeks. For 35 years, it's the best gift I've ever been given. It is understanding, and I think wealthy people understand the laws of compounding, how to have them work in your favor rather than against you. It's like you go into a health club the day after New Year's, and it's filled with people who think that if they work out really hard for a week after New Year's, that's it. They've met their quota for the year and they're in great shape, and come back 2 weeks later and there's half the amount of traffic in the gym as there was, a couple of days before. But when you do it in terms of really wanting to stay in shape, it's a methodical, habitual process. Well, the same thing is true in acquiring assets and paying yourself first. We were all 17 years ago yesterday, and you wake up and you got kids and a job and reality sets in. And so you have to pay yourself first and talk to your older self, talk to your 45-year-old self and say, hey, man, you got kids, you got college, you got a wedding, you got a wife, you got a house. You got to start saving and prioritizing your future. And you do that through accumulation of assets. Even assets like precious metals, which bear no interest, or my baseball cards, which, I was buying long time ago. I became a power seller on eBay, and I was buying cards from the tobacco era, the Babe Ruths and Cy Youngs and the Ty Cobbs, and paying pennies on the dollar. They've outperformed almost anything I own. They earn no interest, nor does gold and silver. And gold has appreciated by 9.8% per year, every year on average since 2000. It was $252 in 2001, and here we are now with it at 3,300 nearly. So it's not so much about the interest. It's not so much about what we've been told, that the road to retirement is only paved with stock certificates and mutual funds. It's about paying yourself first and accumulating assets that matter. And whatever those assets are for you, the one thing that I would inject into it is that you want to factor in liquidity. So you don't want to buy rare and esoteric assets before you have things that are very, very liquid. But the name of the game for me is, and this is how everyone can get ahead, is to accumulate assets on a habitual pattern, on a regimented and habitual pattern, even if it's only $20 a month, $50 a month, whatever it is. Pay yourself first. And that's the best advice I could give to anyone who's starting out in the real world or has got a late start on it. It's never too late to pay yourself first, and that's how you get ahead.
Let's try to diagnose what's going wrong with people, because I hear 50% of the country basically doesn't even pay into the tax base. They don't even make enough money. They're net consumers. And then the second piece of it is that they have no net worth. They can't handle a $400 emergency. They've got no reserve funds. They got no savings. So they don't have assets. They have liabilities. They're all liability. How did we get to a country where we have so many people, 50% or more? And do you think that's by design, I guess, is kind of the ugly question too?
Yeah, well, and it kind of even, goes to, the tariffs. It really doesn't, but it does. He's angry that we're paying charged more to sell our products to the world than they're able to buy ours at no tariff. But at the same time, we're the world reserve currency. And we expect the world to use our currency, which makes our goods cheap, and buy our treasuries, which keeps interest rates low, which raises asset prices for those people who have assets, but keeps goods cheap, which incentivizes through low interest rates, debt, and speculation. And so it's it's your birthright to go into debt, to take out a mortgage, to have car payment, to have student loan, to take credit card debt. And so we have, like, I'll give you an example. I have no debt. I've been fortunate enough to understand the reality and the importance of paying off debt. I have zero, and my credit score keeps going down. And it doesn't make sense to me. Why would my credit score go down when I have no debt and make decent living? Because they want us all to believe that you're supposed to use debt like a muscle, that going into debt is a good thing. And you have a whole culture, a whole generation of people who are living beyond their means because of low interest rates, because of cheap goods. Well, that's cheap. I can pay for it and pay it off. And then they realize they've gotten in too deep. And you're right. It is a problem. We are a very wealthy nation, yet the wealth is divided amongst a very small segment of the population. You have a widening gap between those who have wealth and those who have none. And it's a bad thing when you see this gap widen. So on one hand, what Trump is trying to do is very noble. He wants to bring back the middle class. We've offshored it and the good manufacturing jobs. And so much of the middle class has been sacrificed by the big corporations by sending off offshoring all of our decent paying jobs and our manufacturing jobs. And now you see the middle class exploding in countries like China because we've given them that ability to be the manufacturing engine of the world, something we used to be. I look at what Trump is trying to do as something similar to the Shawshank Redemption, where Andy Dufresne had to crawl through a tube of 2 miles worth of crap to get to the other end. Well, there's reason to be optimistic if indeed he is going to reshore all of our jobs and manufacturing and rebuild the middle class, which has been forsaken and eviscerated in many respects in favor of the high priced, the wealthy elite who are running these corporations. And again, this is somewhat sensationalized. It's not all that way, but what I am saying is that if that really is what he's trying to do, there's nobility in it, but it will be very difficult to get to the other side, just like it was for Andy Dufresne. But that won't change until the whole system changes. We are so far indebted that it's very difficult for us to get to that other side without the whole system resetting and blowing up. And I say that, and I mean that with 1,000% sincerity. I'm very concerned about some form of a financial reset because this can't go on much longer. You're going to end up having literally the very wealthy and everyone else. And that's the way it goes. If you've offshored all of your manufacturing, you don't make anything anymore. Where are all the jobs going? You bring in AI, takes away so many of the low paying jobs. I got the craziest phone call yesterday, Kyle. I get a phone call and I'm listening to my voicemail. Hi, it's a woman. Hi, is this Andy? I might have missed your call. Please call me back if this is Andy. Who's that? I call back and bang, they answer just that fast. Hi, this is Andy, right? I won't take much of your time. This is Jan. I'm an AI bot. Oh my gosh, I hung up the phone as fast as I could. But the point of it is that everything from telemarketing to ordering a hamburger at McDonald's is being moved to AI. And so you're getting rid of so much of the jobs. These lower paying jobs are being taken by automation. So you've gotten rid of your manufacturing. You bring in AI. I mean, my son, who now works with me, I wanted him to find his own place in the world when he graduated college. And so he became a CPA at Price Waterhouse in Manhattan, making $74,000 a year, almost starving to death.
Right.
And that's how expensive it is in Manhattan, living with 3 other guys in an apartment, not much bigger than the room you're sitting in right now. And I thought to myself, well, who the hell needs to pay a kid $72,000 when AI can analyze that same real estate investment trust balance sheet like that without the problems of an employee? So much is changing that there is nobility maybe in what he's trying to do, because this is a system that's only going to get scarier as far as I'm concerned because of the very deflationary effect that AI is going to bring to the world, the lack of manufacturing and the lack of these jobs that amount to anything. It's becoming harder and harder and harder. You put that on top of record student debt, record credit card debt, record mortgage debt, record government debt, record debt everywhere. And to your point earlier, low assets and liabilities. There's an old statement that say assets feed you, liabilities eat you. So you have a whole generation of people that are massively indebted with very little in the way of assets, who are watching the prospects of job creation and maybe even job elimination become a reality. Job creation falling, job reality rising, or job getting rid of jobs becoming a reality, it's a scary, scary time. And that's why you must pay yourself first. You must. And for kids going to school or looking for, jobs, to me, it's a no-brainer. As much as I hate to say this, as much as people hate to hear me say this, go back to what it used to be. Find a trade, become a plumber. They'll be the next, high paid entrepreneurs. Start a plumbing business. Start a pest control business. Become an electrician. These are the things that will give you opportunity to thrive in an environment where AI is going to eat a lot of the other businesses and job opportunities, even some of the white collar, like accounting, like even in the medical profession, like who needs a radiologist when AI can tell you what's wrong like that. Mm-hmm. And so crazy times for sure, man. No question about it. And that's why I think maybe this is part of the reason that you see the central banks buying gold at the level they are. They understand things are changing, that the system is changing, that the system needs to reset somehow, that we've kind of gone to the end of the line on this particular system, and things are changing, moving to a system more on transparency and commodities. And man that I follow very closely, a very, very smart man named Zoltan Pozar, who used to work at the New York Fed, and he understands the plumbing of the system very well. He calls this Bretton Woods 3. Bretton Woods 1, when we took over for the pound sterling at the end of World War II. Bretton Woods 2, loosely, when we became the petrodollar, signed the agreement with Saudi Arabia, which coincidentally they did not sign again here last year, which was the 50th anniversary, re-upping the exclusivity of only taking dollars for oil. Mm-hmm. Big deal. And Bretton Woods 3, he says, now we're in a system that will all be about transparency, which would be blockchain and commodities, gold. And if you look at the United States, we've become a net importer of gold since November, since Trump won the election, a net importer after being a net importer for my entire career. And we've seen north of almost 60 million ounces delivered into the COMEX, most of it coming from London since then. Crazy things are happening in this market. But the central banks, which are the most wealthy, well-informed traders in the world, are shedding dollars, they're shedding treasuries, and they're accumulating assets, not just gold, all forms of assets, rare earths, base metals, precious metals, oil, gas, you name it. The name of the game is commodities, transparency, and I have a feeling that we will enter a new system, a system that will be vastly different than the one we're in now. How we get there, I'm not exactly sure, but I am fairly certain that this system that we have lived in, you and I, in a world of opportunity and growth, isn't the same world that our kids are growing up in, and something needs to change. And I have a feeling we're in the midst of it right now.
I got this time capsule that I sometimes go back and look at, and I think it's 1997, but it's a Vince Flynn novel, and it's about America. Have you seen this?
No, I haven't, but I know Vince Flynn very well. I used to read a lot of his books.
Right. So he wrote this book that was called Term Limits. And it's about killing off senators and politicians, American outrage with the political system, that we're all getting screwed and scammed. Now, this is before the war on terrorism. This is before 9/11, 1997. So people can put their head back in there. I'm in high school at that time, so I didn't read this. But, it's essentially some operator group of guys get pissed off. They decide that my friends have been killed in some foreign wars and I'm not into it. And so you're going to go and come clean with the American public. And they are outraged in this book. Outraged. He's writing about it. The American populace is furious that they're about to hit $10 trillion worth of national debt. It's under $10 trillion in 1997, right? For all of American history, we were under 10 trillion. Of course, now we've more than tripled that. So they're upset about that. And the sentiment was the guys who want to hold the politicians to account with their necks, the way the founding fathers did, who want to go out there and put these people to death. Yep. Those guys are the heroes of the story. And there's kind of this semi-hero, anti-hero who's going to try to uncover the mystery, but you're really sympathetic to the guys that are getting rid of the politicians because, man, I remember growing up and it was who were the two worst types of people? It was lawyers and politicians. They're the same thing. Those are the scum of the earth. That was the 90s sentiment that I grew up in as a kid. And I'm sure that you saw it as a young adult. And we had one thing that basically kept us from whatever that precipice was. We had a massive change on September 11th of 2001. And it almost like the status quo got a chance to re-foundationalize this scaffolding that we're talking about that's been so rickety. It gave them some false sort of foundations and they built it up. It sounded like we did the same thing again in 08 with the financial collapse. Cousin of mine has been postulating that we had a once in a generational time to set things right. And instead of backing the people, the government backed the banks. I'm just curious about I had this cursory understanding of it, both from Pop and from kind of just living through it anecdotally. I've never been a money guy. I've never really been interested, but you've been in this business during that time. Does any of that kind of ring true that there were some reset points and we missed the off ramps and now we're careening towards the end or maybe another reset like a 9/11?
Yeah, I mean, to me, what sticks out is 2008. We should have let all of the banks collapse. We should have let all of them collapse instead of bailing them out. Mm-hmm. That's the way that Mother Nature works. You look at a forest fire, it's really sad. The animals and the die and plants and trees die, but you come back a few years later and it's healthier than ever. In 2008, the Federal Reserve's balance sheet was $800 billion when the markets collapsed. And at the peak of QE through the pandemic, it was up to almost 10 trillion, well over 9. All of that addition under the Fed's balance sheet was in interest rate sensitive investments like treasuries and mortgage-backed securities, which just further incentivized more debt, further distorted asset prices, furthering the problem in a massive, massive way. So yeah, that is exactly what has happened. And I can see how we would be sympathetic to these politicians who sold us all out. I mean, look at the money that was wasted that Doge has uncovered, even just the 200 billion of it. And look at the things that they've given money to, the fraud. It's unbelievable. And it's horrific. We've crossed that line, Kyle. We talk about this debt, $37 trillion. That doesn't take into account Medicare, Medicaid, Social Security, government military pensions that are north of 175 trillion in and of themselves. A trillion seconds ago was 31,688 years ago. So we have squandered the trust of our own people, of the rest of the world. We have squandered the privilege of being the world reserve currency. There should be people that pay with it for their heads. There should be. As horrible as that sounds, I mean, in the private world, you'd go to prison for the rest of your life if you did some of the things that these people who we trusted have done. So I get that. And that's why it was probably a New York Times bestseller, because people can understand that. You know, we work our ass off our whole life to raise a family, to do what's right. You go to the FBI, you raise a family, you dedicate your life to the American public, only to find out there's some things there that aren't so great. And we are paying all of this money in taxes that is then squandered away on things that borderline stupidity and absurdity to flat out theft and corruption. And I get it. But when you look at what the Federal Reserve did, all they really did is, instead of letting the beach ball pop through the water and clean everything up, they stepped on it. But it's got greater and greater pressure when it slips out from underneath the foot, it's going to come up so hard it's going to take your chin off. And that's kind of what has happened in a system that has incentivized massive debt creation. Like you said, people are indebted and can't come up with any money. Well, that's what an era of super low artificially interest rate environment prices does, along with easy money. It creates massive distortions in asset prices and misallocation in resources and capital, and has got us where we are. The best thing that could have ever have happened would have been to let the forest fire burn, to blow up all of these companies who had erroneously speculated, and not have the Federal Reserve come in, start over. And we would be on our way to a system that had more assets than liabilities. Remember the old saying, assets feed you, liabilities eat you. Let's look at the American government's balance sheet, not the United States, but the government of the United States has a balance sheet where assets are roughly $5 trillion. That's about it. The largest asset of the United States government, about 40%, is student debt. That's the largest asset. It's on their balance sheet, about 1.5 trillion. That's an asset, according to them. Number two is military. Number three is land. and just over $5 trillion in assets against $200 trillion in liabilities. They only talk about what's on the balance sheet. Yet Medicare and Medicaid, Social Security, and government pensions, those are huge numbers that aren't on the balance sheet. And what's discretional? Well, discretional spending would be things like military. Oh, well, we have a $1 trillion military budget this year. That means you have to borrow the money to pay for the military. The Congressional Budget Office says that by 2031, and they're nonpartisan, by 2031, 100% of tax revenue will go just to pay the interest on the debt and the mandatory entitlement spending, which is off balance sheet, like Medicare and Social Security, which means things like military will have to be borrowed along with everything else that's discretionary. So we have squandered this lovely opportunity. You go back to 1971 when Nixon temporarily closed the gold window, never opened it back up, and look at what a dollar was worth then and what it's worth now. Gold was $35 an ounce then. Now it's up almost 100 times from that. So did gold go up or did the dollar go down? My dad graduated college in 1963. He was married to my mom then. I was the last exemption, marriage was, to not go to Vietnam. He signed up for ROTC and then thought to himself, there's something wrong about this. Maybe I should just get married. And, so he did. 63. They're still married, thank God, all these years later. But he said to me, Andy, I got out of college and my first job where your mom and I could live comfortably was $5,600 a year in 1963. So what's happened? Has shit got way more expensive or has the dollar been eviscerated? All of this stuff makes sense to me in the light of the Vince Flynn novel. We have been led astray by the people who are leading us. And that's why I have such respect for someone like yourself who has integrity to tell the world, hey, wait a minute, it's not all what we have been told. There's stuff going on behind the scenes here. That's what I do. I try to say, hey, there's stuff behind the scenes here. You need to protect yourself from this insidious erosion of the dollar, and everything, including the way that they measure the erosion of the dollar, is a lie and is massaged and is manipulated. There's a website called shadowstats.com, John Williams. All he does is quote the unemployment numbers and the inflation numbers the way that they used to be quoted under the Reagan administration and before. And he would say, yeah, if they say we have 2.5%, 3% inflation, add an 8 to that. So you're about 11% inflation. And that's why when we hear inflation's coming down and we go to the grocery store and say, I thought inflation was coming down, this doesn't make sense. Try to take your wife out or your wife and your kids to a dinner. You and your wife each have a glass of wine and buy dinner for you and your kids. And you look at the bill and you're like, man, when I was 16 years old, I could have gone on 5 dates for that amount of money, and all this stuff is happening, Kyle, and it's happening in an accelerated fashion. So this is kind of my rallying cry that if you are fully invested in dollars, you're destined to go broke. And if you're not a contrarian, you're destined to be a victim. I think it's time for people to open their eyes and look around and question everything, even under a new administration who's brought with it a great deal of hope.
That's fair. I did a little experiment with my dad. I just had my calculator out. We were talking about 2% inflation, which is apparently the goal that our Federal Reserve is trying to maintain. 2%, that we lose 2% of whatever you have in your savings. And your wallet is worth 2% less just by sitting in your butt for in your belt pocket for a month. And so I said, okay, if it's 2% a month and you start with $100, by the end of 2 years, you're down to $60, give or take.
Yeah,
it's shocking. Like you just lost all the money you had. It's 2%. That's their goal. That you basically have nothing at the end of you've got 50% or 60% of your original holdings. That's crazy.
I asked Judy Shelton, I did an interview with her, who the hell in their right mind came up with this stupidity? I said, because Judy Shelton was Trump's nominee to run the Federal Reserve in 2016. She's advocating, I'll show you real quick here.
Go for it.
This is Judy right here.
Okay.
Gold. I highly recommend it. She wrote a book about sound money, about gold, and she advocates for issuing treasuries pegged to gold. She said to me, Andy, Trump will issue 50-year treasuries on July 4th, 2026. That is what he told her. The 250th anniversary. because who in their right mind wants to buy treasuries that are being inflated away and the sanctions and all that stuff. Anyways, during the interview, I said, Judy, I've been dying to ask someone who could have very well been running the Federal Reserve. There's a lot of rumors that she will end up running it again when Powell, or will run it when Powell, when his term is up.
Okay.
But anyways, I said, who came up with this stupid idea of 2%? And she said it was Janet Yellen's husband, who is an economist, and the theory behind it. Because I said, doesn't stable prices, isn't that really better with no inflation? And she said, yeah, but the theory was if there's no inflation, employees get upset because prices don't go up. So you really can never give your employees much of a raise. But if we inject 2% inflation each year into the equation, why then you can give your employees a 1% raise. And even though they're going backwards, they feel like they're going forwards. That was what she said to me.
That's actually evil. Like that's one of the most evil things I've ever heard.
Evil. And they flat out knew it. So yes, it is evil. And for people who want to check that out, go to my Miles Franklin YouTube channel and watch the Judy Shelton video. She said that to me. And that's the genesis of this stupid 2% thought, because the lower the level of inflation, the higher the standard of living. And one other point, to your point, for those who don't know the math side of what you said, there's something called the law of 70 seconds. Are you familiar with that?
I've heard it, but now I won't know what it is. So
it's
please.
Very easy. And this is like why credit cards start at 18%. 18 times 4 is 72. You take the number of interest that you are being charged or that you are charging. And at 18% interest, you divide it into 72, that's 4. That tells you how long before your principal doubles. So if you only paid the minimum interest and never paid anything else off, in 4 years, your principal would double. So the law of 70 seconds says at 2% inflation in 36 years, you lose half. You've lost half of your wealth. An easier way to understand it: if treasuries were yielding 10% in 7.2 years, your principal would double. So that's the math behind it. And
well, so in this case, correct me if I'm wrong, but it's if the instance is that the inflation is 2% a month, which is what we were looking at. It's not annual, it's per month is what they were looking at. Then you would lose it in 30 months, not 30 years. Does that sound right?
That it would be 36 months, you would lose half. That is exactly correct. If it's 2% per year, it'd be 36 years. But you're exactly right. It is.
So it's whatever your unit of measure ends up being. It's
yes.
Yeah. And that's
divided into 72, and that gives you the time for it to double.
Yeah. So you said it earlier. I don't always talk about financial situations, but since we're talking money stuff, one of the reasons why I did what I did, and I don't know if we've ever talked about this on or off camera, but I never had debt outside of a mortgage as well. We, paid cash for cars. We've never had anything on a credit card since my wife and I have been together. I actually had no money at one point. I had negative money. I had negative $500 in my bank account. And that was a really bad experience where I couldn't eat and I couldn't afford to live and I didn't have anything, like zero things. I just didn't have any assets and everything in my life was a liability. And I went, well, I'm never going to do that again. So I've endeavored not to live in that space. And if you look at that and you extrapolate it to federal employees, you realize that it's a national security risk to have people that don't understand how money works and find themselves to the point where if I don't get this paycheck, I begin to default on things that make my life materially more dangerous for my family and food, and I can't drive and all the other kind of things. My house goes away. If you can't survive for a couple of weeks, couple of months, you now have slaves. You have people that will do what they're told. And we have that in the federal government. If anybody doesn't realize this, they are working. Well, you know what a GS-26 is?
No.
A GS-26 is off the government pay scale. Obviously, it doesn't exist. But that's two people. They'll have GS-30s. That's a man and a wife, both working for the federal government, making GS-15 salaries. Okay? So they both make a GS-15 salary, which is $150,000, $170,000 a year. They got two BMWs with $800 to $1,500 a month in payments. They got a $900,000 house just outside of Washington, D.C., where their payments are, whatever it is now. It used to be much more affordable. It used to be $2,500. Now it's probably like, $6,800 a month. And so their liabilities are $10,000 a month before they even get started. And they're making a decent salary, but before taxes, they've already cut chunks out of it so that they're living on what some people are living on in the Midwest who make $60,000 a year. And those people cannot say no. They've got no option. Like, they're doing what they're told because the alternative is the BMW goes away, the house goes away, and they're depossessed of everything they have because they don't own anything.
I don't
they're all
remember
dead.
the exact number, but it was 25 or 30% of the people making six figures a year are paycheck to paycheck.
I think it's probably at least that. And the government, there's a ton of people doing that. There's no question in my mind. You know, six-figure households even. Let's call it that. That broadens it out, I think.
Yeah, and that's how it all starts. Okay, well, you become a slave to the beast, I guess you could say, and it's a tough deal. It has to change. It certainly has to change, and that's where I just struggle with, is President Trump the Trojan horse, or is he riding on the Trojan horse? I don't know. I can't tell. I really don't.
What would a breakdown look like? So you mentioned it earlier, and you talked about what is it, ID 20? Is that right?
Yes.
Well, first of all, what is that specifically? Less people, because you said the people that are backing it, and that doesn't sound very good to me. But what is the plan, and what would a complete breakdown look like if you were just going to go into your nightmare, sort of extrapolation?
Well, I mean, ID 2020 is just the new digital ID that you have to fly, and they want it for elections.
This is real ID that people are hearing about right now. Real ID. Right? Which most of us, if you have a driver's license in most states, it's not even optional anymore, I don't think.
Right. And so it's in essence, it's kind of a foray into the digital surveillance state, and where everything is tied to you. I mean, there's a patent that, and again, assuming that the real ID is the same thing as the digital ID that Bill Gates, the Gates Foundation, the Rockefeller Foundation, and Sarna have patents on. The whole theory behind it was to tie your medical records, your financial records, your passport information, everything into this one digital ID. Well, that's the first step in transitioning towards a cashless society. And Nomi Prince did a wonderful expose on it. And that really is a scary thing, is that we're moving into a system where privacy is eroded, and you're tracked everywhere you go, everything you buy, every time you get on an airplane, every time you present ID. So
can I extrapolate the scare of this? Just like I'm freewheeling here from my own head, but if somebody has all of your records, your medical records, your bank records, your communication records, we know who you're talking to. We have all of the things, your where you've lived and your history of involvement, and we can go back and we can see how you've progressed as a human being at the age that you're at. We go out there and we scan your ID and we say, well, that's Andy Schectman. He doesn't have any liabilities when it comes to debt, right? But he does have a risk of cancer because we have his genetic records tied to it now, because he did a 23andMe a long time ago, and now we know that he is more likely predisposed towards this. So we can individually adjust our insurance rates for you as a driver, because your driving is going to potentially be affected by your ability, your cognition, because you might have a kidney failure coming in, and there's a 70% chance based on the genetics we've seen. So we're going to individually tailor both our rates of how we're going to loan you money. We can change our rates on how we loan you money because you may not be around here in 10 years to be able to pay that thing back.
Yeah, and your insurance rates, well, they're going to go way up for medical insurance and life insurance, and maybe you didn't get that vaccine that you were supposed to get. What are you doing out here filling your gas? The authorities will now be alerted. Or, I mean, who knows? You take it as far as dystopian.
That could be, as dystopian as you want. Okay, and that's the thing that people are maybe the most innocuous version is that they secure our elections, which doesn't sound like anybody wants to do.
Right, and everyone wants fair and real elections. That is that is the mandate. Why they're bringing it in, but who knows? Who knows where this goes? I have a feeling that they may not usher in central bank digital currencies, and instead they'll issue stable coins by third party, and they'll just control the on ramp and the off ramp. That's a lot of what Judy talked about, issuing stable coins backing the new treasury. Well, stable coins right now are supporting the treasury market without going too far into the weeds. In the crypto space, if you move throughout the crypto space, well, you don't want, when you sell Bitcoin, to buy something else. You don't want to take that money and go into, before you buy something else, and go into your Bank of America account. They don't like that. And so instead you go into what's called a stable coin, which is a 1-to-1 value between this coin that's pegged to the dollar, and allows you to have that liquidity as if you was just dollars in a bank account without going into your bank account system, into the banking system. So every stable coin now, like Tether and USDC and the one issued by Ripple, they're all almost 100% backed by U.S. treasuries. And so the ironic thing is that this crypto space is actually supporting the legacy system. And I think that's what they want, these stable coins, that they can monitor the inflows and the outflows. They can be the on-ramp and the off-ramp police while making everyone think that they have privacy, not issued through a central bank digital currency. But if Judy is right, we will see more and more and more drive towards stable coins that represent the same thing as US dollars, that transact like that. There's something that just came about in China where they signed up with ASEAN or AESA, and it's about 12 or 13 Asian countries and a half a dozen or so Middle Eastern countries that represent about 40% of global GDP that are trading outside of SWIFT. But the money settles in about 8 seconds. So you can buy gold from United Arab Emirates to Hong Kong and send them the money, and in 8 seconds it settles, whereas it could take 2 to 3 days through the SWIFT system.
Got it.
But this bypasses the SWIFT. This is where we're going, and people are preconditioned with Zelle and Venmo and Apple Pay, and little by little by little by little, and then bang, all at once. That's called logarithmic decay. You can see that everywhere you go, whether it be the system changing, the value of the dollar, the erosion of our civil liberties. All of these things are little by little, they are slowly happening. It's the frog that's put into the pot of lukewarm water and the heat's turned up, and then it falls asleep before it reaches a boil, rather than dropping it in the pot of boiling water and out it jumps. Well, that's the CBDC. Has too many people fighting against it. But little by little, we're seeing progression towards a cashless digital society. Maybe not the way that some people think, but certainly these people have thought out ways to, I guess maybe put the public in that pot of lukewarm water and slowly turn up the heat. Seems like where we're going right now. And
Tell me
if this benefits of having assets right now is that they're kind of off the grid.
Yeah, tell me if this lands, because I'm trying to work out what you're talking about with the stable coin. I'm not a crypto guy. It always looked like a casino game that I didn't understand all the rules, and I didn't know all the people at the table, and I never understood who was playing for the house and who wasn't. And that just seemed like a terrible idea. And every time I see someone, they do a run, they do a pump, and something gets big, and somebody makes a bunch of money, but it's somebody who knew more than anybody else that was in there because a bunch of other people lost money. So tell me if this analogy works for you. The stable coins are almost like when you're in the crypto, you're on the table. Right, you're moving money around, blackjack. You're moving money around, whatever it be, roulette. You're doing craps or something. So you have the ability of big fluctuations, big losses. You got the volatility and the excitement of possibility of gaining, right, or losing, I guess. And when you want to pull it off, you're pulling it off in chips.
Yeah, you walk from the blackjack table to the roulette table with a handful of chips, but it's equal to 1-to-1.
It's 1-to-1 to whatever it was. But the thing about it is that these chips are basically RFIDs, so they know exactly who's got every chip in the casino. So we already know where your money went. So yeah, you came in, maybe you're up a bunch, but you're still putting it in terms of something because we need a unit that is stable across everything. We've always needed that. And for everybody who's always telling me, no, I've got nobody tells me how much money they have in Bitcoins. They might say they have a couple of Bitcoins, but I go, what's that worth? And then they tell me how much it's worth in dollars, right? We always have to have a reference point, just like we all, you can't go outside and say it's hot. Well, you go, how hot is it? You go, it's super hot. I'm really sweaty. We go well, when do you sweat? Well, I sweat after 85 degrees. It's like, cool. You put it in degrees Fahrenheit. I know what that means.
Maybe part of the reason that they've allowed Bitcoin to get to where it is, because by extension, it's actually a proxy for the dollar. It ultimately comes back into dollars and helps increase the money supply and ultimately the demand for dollars. There's always something nefarious on the other side, and that's the exact same thing with the stablecoin market. Tether was in big trouble by the Justice Department, and all of a sudden they're not. But look at their balance sheet; it changed from having all sorts of assets to now being almost entirely treasuries. And every time someone buys a stablecoin, a new stablecoin is issued, which is then using those proceeds to support the legacy system, to support the treasury market. So as the central banks of the world have been selling treasuries, it's the crypto market. The ironic part is everyone's trying to leave the legacy system, and they're supporting it by buying into the stablecoin market, which is a natural part of the way business is transacted in cryptocurrencies. But because they're issued by third parties like USDC, which is Goldman Sachs, like Tether, which is an out of the country company, or Ripple Labs, it's not the same thing as Big Brother issuing a CBDC. But in essence, if you monitor the on-ramp and the off-ramp, it kind of is, so to speak. And I think that's where we are heading. We're heading into a system that will be far less privacy. And so one of the neat things about gold and silver is that it allows you the maximum privacy you can have under the law. And, there's nothing wrong living in a world of decreasing privacy to have as much as you possibly can, leaving a legacy for your kids.
The other goofy thing is we just moved again. And you have those moments in your life where you like redefine, what value is, what's good and what's not. There's a certain amount of utility I have in firearms, and they weigh a certain thing. My ammo is worth something because I can use it, and so I carry all that. It's all heavy as hell, and it's a bummer. And then you go and you look at it, and you're like, this table cost me $1,200, and I've used it for 8 years, and so I got utility out of it, and it weighs a bunch. It's a pain. It's wood, so it's scratchable, and it was $1,200. And I've got a 1 ounce bar of gold, and it's worth $3,000, and I can put it in my pocket, and I can buy 10 of those tables with a couple of ounces.
And you can run to your car.
I could just get out of there. Yeah, it just changes the game. And then you look over and you go, but how am I going to move? I'm going to need these 50, these 50-pound, 5-gallon drums of fuel, and they're not worth very much money. There's only $40 in there. And at the same time, if I don't have that, I can't move with my $10,000 worth of gold in my pocket. So all these things, like I always am constantly doing these strange evaluations of weight and value and utility, and we're all kind of playing this game. But the upside is
drop of a hat, that drum of gasoline can be worth more than the bar in your pocket. It just
same thing with a box of ammo. Yeah, and the box of ammo has the same thing, because you look at it, and people would always tell me, they'd say, hey, what kind of ammo should I stock up on? I said 22. And they said, why? I said, because you can have a lifetime supply in a backpack. You can kill all the game you'll need to, and you can defend yourself for a very, very long time. And it's cheap. It's the cheapest thing. It's the easiest thing to move. It's portable. I can buy a hamburger with 22 ammo because it's so small. It's breakable into a transactionable amount.
Yeah, if no one's ever held a 22, I mean, it's this big, and I was shocked the first time I saw one. I mean, you wonder how many shots you'd have to shoot someone with, God forbid, an intruder to stop them. The bullets.
Yeah, if you do it right, Andy. I'm just telling you, I've knocked down 50-pound pigs with a single shot.
That's coming from an expert marksman too.
Well, people do it all the time, though. I mean, people used to take down deer with these things. You shoot them right behind the ear, and you drop a deer, and now you got food for your family for 2 weeks, 3 weeks, depending on how big the family is. Maybe more, maybe the whole summer. Maybe the whole season. So it's just a funny little way. We have all these ideas in our head of like what things are worth and what the value is. And for me, it's just, correct me if I'm wrong, because you're in the business of helping people understand what to do with their money and what wealth equals. But it feels like most people just have no idea about what assets are, what the utility of anything that they have is, and what you do with it. And so I feel like that's why half the country is just riding around, and they're just following whatever the people next to them did, and they're getting themselves into debt, and they're buying a BMW or a Mercedes, or maybe they bought a new Honda, and they owe $60,000 on a car that used to cost, in my lifetime, you could buy a car for 1/5 of your annual salary easily. You can't do that anymore.
No. And, maybe the reason you look at things differently is you wonder what's coming. You think about that. You think of the future. A lot of people can't get out of the way of what they never see coming. And maybe your eyes are opened up through what you've been through and your trials and tribulations as an adult. So you're a little bit more cognizant of things that people aren't paying attention to. For me, it's a monetary thing. And, I'm the little boy who cried wolf, but I do remember that the last page of the story, the wolf comes. And so being prepared,
that's a really good point.
And being prepared, man, for something that you hope never happens. Well, that's insurance. And, with my gold and silver, I hope I never need to use it. If I do, I'm damn glad I have it. It doesn't have to be for that emergency when the wolf is at the door. It could be a hell of an opportunity. Or maybe I just, God forbid, I meet an untimely early departure and I leave a legacy for my kids. That's what assets are. It could be my baseball cards, anything. Assets are there for when you need them, and a wonderful way to pass wealth on to your family down the road. Hopefully not anytime soon, but thinking about the what if is always a good thing. I look at the biggest money in the world, the movements that they're making, and I get very, very much concerned when you see the most well-informed traders in the world buying gold at the level they have been for the last several years. And really accentuating that is that they're all pulling the gold away from the New York Federal Reserve and the Bank of England. These are the two hubs that gave direct access to the COMEX in New York, and the Bank of England would be the LBMA, the London Bullion Metals Association, 140-year-old hub. These are the two price-setting mechanisms for the world's commodities. And when everyone is pulling the metal out, which no one ever did before, no, thank you, I'll have physical delivery, thank you very much. That's something that is vastly different, vastly than ever before. Since November, the United States has become a net importer of gold. Never happened before. A net importer of silver. Never happened before. Well, we've always been a net importer of silver because we don't have any. But gold, we've been a net exporter, and now we're a net importer. So the most sophisticated, well-funded, and more importantly, well-informed traders on the planet, the central banks, are buying it like they know something's coming, and they're getting out of the way of it. So that's why I do what I do. And
yeah, what would the worst case scenario look like though? Like let's put it, imagine if you can, you're below average American situation, which means they got debt, no net worth. So there's people that are living paycheck to paycheck. They're keeping their head above water, but with a lot of furious struggle to do so. And what is the worst thing that you imagine that these traders know that nobody else does? And what happens to that person in that scenario if we can extrapolate?
The dollar is in very, very big trouble, and the treasury market is in very, very big trouble. And we see a dumping of dollars and treasuries globally, which would spike interest rates to the moon. You can't, if the dollar falls and the treasury is dumped, the byproduct is spiking interest rates, which would reset the system. Stocks, bonds, real estate, the banks, the insurance companies, they're all massively over leveraged, tied to U.S. treasuries, and tied to interest rates. And if you saw a massive dumping globally of treasuries and dollars, and maybe that's what they've been, that's what I thought they were trying to do under the Biden administration, incentivize through the lunacy and madness in our country, on top of the mismanagement of the dollar and the inflation and the weaponization of the treasury market and all of these horrible things that make everyone say, screw it, we'll just go on our own. We don't need the U.S. anymore. We'll join together these nations that with all of the commodities of the BRICS nations, the oil production, the hard asset metals and base metals and rare earths and all of these things that these countries possess in Africa and Asia and Russia and India and South America, and leave the United States on its own high and dry. And as the rates spike, everything in this over-leveraged world collapses like that. Stocks collapse, bonds collapse, real estate collapse, the banks, which are massively over-leveraged and undercapitalized, they collapse, as do the insurance companies. And those sons of bitches did it to us. Those people, Xi Jinping and Putin and OPEC, how could they do it to us? And then, well, guess what? We're going to restart the system. And everyone's going to, here's your reset. Well, that's the easier way to default. There is no way out of this, Kyle.
Yeah, what does the reset look like though? So like John Q, he's he's 45 years old. He's got a house that he's got a mortgage on. He's got a car he's got a payment on. He's got transactional short-term debt from a credit card, and he's paycheck to paycheck. What is his experience of that in your extrapolation? If you
know, because I don't know how the math would work out, but the debt wouldn't go away.
Right.
It would just have to be readjusted, so to speak. But what
you keep saying reset though, and I'm trying to, that's what I'm trying to hone in. What does reset look like in your mind?
It would level the playing field, because again, think of asset prices. All of these asset prices are what are they valued at low interest rates? What are they valued at high interest rates? Your insurance vaporizes. I mean, your real estate vaporizes. Your stock portfolio, those companies who have thrived in a low interest rate, easy money environment, they vaporize. They go out of business. The debt that is owed cannot be salvaged. It's defaulted upon. The insurance companies that are all loaded with treasures, well, they're not going to pay insurance because they're going bankrupt. The whole system resets and starts over. What does a start over look like? That I don't know, but I'll tell you one thing. In that environment, your stockpile of ammunition is probably worth a whole hell of a lot more than most other things, because at that point, when people lose everything, they lose it. And what's, you willing to go steal a hamburger when your kids are starving to death and you got nothing? Now, I'm not trying to paint this horrible picture, but the point of it is that how bad could the reset get? I don't know. You tell me.
I mean,
How
is this
can it be?
Yeah, is this Russia where people had, a trillion rubles in a wheelbarrow trying to go buy a loaf of bread? Is that kind of the thing we're thinking of, hyperinflation?
Yeah, absolutely. That in Weimar Republic, Germany, after the war, they would come there with a wheelbarrow full of Reichmark to buy a loaf of bread. They'd go in to see if they had bread. They'd come out, and the wheelbarrow was gone, and the Reichmark was laying on the ground. So, the wheelbarrow was worth more. At the end of the war, the largest life insurance policy issued prior to the war was never cashed in because the stamp to send it was worth more than the value. So, yeah, I mean, let's hope we don't come to that point, Kyle. But the bottom line is that it's never, ever, ever too late to start paying yourself first, start whittling down your debt obligation. And even if it's only a handful of dollars each paycheck, put it in an ounce of silver, put it in some 22, pay off your debt, put it in some food or some water or anything that is an asset to your family. And that's the first. Every journey starts with a step. That's the way to do it.
Do you prioritize, there's the Dave Ramsey, who I've never actually listened to a full Dave Ramsey. I've always got kind of like the secondhand version, but it seems like he always advocates you handle your biggest debts first, your highest interest first. You kind of do that. Are you kind of in that sort of school of thought if you were advising people, or do you not even get into that at all?
I mean, I just think, you pay off whatever you can as fast as you can, best you can. I mean, the big ones may be the hardest. If you have a mortgage that you'd make a 13th payment each year at least, and use that 13th payment to work down the interest, and you will cut down by many years how much you owe. Make a 14th or a 15th payment, and you will cut down substantially. And each time pay it off to principal. If you're paying your credit card, pay an extra, $75 every month. Do what you can to get out of that debt. Variable rate debt is the most important to get out of. The high yielding variable rate debt, remember, at 18% in 4 years, it doubles. Well, if they bump it up to 24% in 3 years, your principal doubles. So do what you can to get rid of variable rate debt, even if it means consolidating it. And, do the best you can to prioritize yourself and your family first, even if it means paying a little bit less on that debt for 1 or 2 months, so that you can add an asset base or continue to add to an asset base to your family. Because, you only get so many chances to do that, and time keeps going. So every little bit matters, right?
I watched my cousin tell me he went from being a homeowner to being a renter, even though he's got a 7-figure net worth. I don't know, maybe it's like low 8, something like that. He's not a poor guy. He makes really good money, and he works in the money world. And he's like, there's just no, you just do the value cost comparison. And for the cost of housing, it's more advantageous not to own it at this point in a lot of different markets. And every market's different. And a lot of people realize it's like, well, if you bought it at a cheap interest rate and you managed to pay it off, great. Or if you hold on to cheap money, that's a great thing. If you got a locked in price, man, my place out in New Mexico, we were like 2.25. So
that's unheard of. That is free money. But your brother-in-law is a dude who's getting out of the way of what he sees coming.
Yeah. Yeah. Well, then you look at it, you hear a lot of people and they go, I know the American dream always looked like you got to own your own house. And at some point in time, it's like, no, I just got to know what it costs for me to live and what my financial obligations are each month. And can I stock away assets and avoid the liability of it? And if housing costs 3 times as much for me to be able to be an owner versus be a renter, the house is the same that I live in, it turns out. Maybe you have a little bit of I think there's a lot of pride that gets played on. And I wonder how much that plays into the market.
From the time you were born, Kyle, since 1982, I'm guessing it was somewhere in that neighborhood.
Yeah, 81.
Yeah. Interest rates have gone straight down, making home ownership probably the best thing you can do. But those times are changing, and this country has changed, and the value of a dollar has changed. And, I was a senior in high school in 1988, and with the $20 bill in your pocket, you could take your girlfriend out to a movie and popcorn and soda and candy and a movie, and still have a couple bucks left in your pocket. I mean, the cost of everything is accentuated so much that things have changed, priorities have changed, and realities have changed. So your brother-in-law is not so far off. The idea of home ownership has become almost outside the realm of possibility for a lot of people. Kyle, you're someone who I would really love to sit and talk with for a very long time. I have to say, please excuse me. I have 7 podcasts today. Somehow I have one that I was supposed to be on 16 minutes ago, and they keep blowing up my phone. So I'm going to need to go.
No, thanks for joining me for as long as you did.
You're someone that gives me such a good feeling talking to, just because of who you are and what you stand for. And although I'm not anywhere near I'm not anywhere near you in terms of what you've done, your ideals resonate with me, and I try to do something similar. Help as many people as I can do the best thing. So do know this, anytime I can come back, I would love to come back and talk about anything you want. I do need to go. I'm being really rude to this. No,
I appreciate you spending time with me. It fills me up talking to you, Andy. So thanks for joining me.
Dude, you stay well. Please send me a copy of this when it's ready. I'll send it out to my list. And God bless you and your family. I look forward to doing it with you again anytime.
You too, sir. Have a great one.
See you, brother.
All right. See ya.
And that is the Sunday Sit Down. Thanks for joining us. I hope you enjoyed this conversation with Andy Schectman, again, the founder of Miles Franklin. You guys can find them at milesfranklin.com if you're interested in getting into the gold business. Tell them we sent you along. We don't have a deal with them right now, but I'm sure we could probably set something up in the future. Really appreciate all of you being along for the ride on this one, and I hope that this was an informative conversation, that you learned a little something, and maybe you found another person to follow out there on the social media. We'll put his links in the show description. Speaking of, if you want to follow us, it's rumble.com/Kyle Seraphin. If you want to catch the best live chat on the internet, the nicest people out there, and of course, our growing audience over on youtube.com/@Kyle Seraphin. Easy to find, and you can catch us in 4K streaming during the week. If you wanted this a little bit early, you can always join us and subscribe over on the locals channel, which is kyleseraphin.com. Big appreciative thank you to those folks that are part of it. If you want to share the show, just go to kyleseraphin.com. KyleSeraphinShow.com. You can share it out there with your friends. Spotify gives you both a video and an audio opportunity to be able to watch and listen, and you can change back and forth between them. Better than iTunes, better than Apple, better than iHeartRadio. So if you are listening on an app, consider using Spotify. It's free. It doesn't cost anything more. You won't get any pop-up ads or anything like that. And we get the best sort of information about who's listening. So I appreciate all that stuff. I'll just say happy Easter. If you're watching after the fact, have a happy Easter week. And I look forward to seeing you at 0930 Eastern time during the weekdays for the Kyle Seraphin Show and our regular program. Till then, God bless you. See you soon.
Thank you for listening to the Kyle Seraphin Show, streamed live weekdays on rumble.com/Kyle Seraphin. Follow Kyle on Twitter, Truth Social, and Instagram @Kyle Seraphin.